one of the reasons why I want to play more bridge is that bridge is extraordinary training for making inferences. So I've learned that analysis is not just what appears on the balance sheet and income statement, although you should certainly be able to do that and look at it well. But, and this may be the most valuable thing I tell everybody here. Based on what I know about this person, based on what all of the history I know about them, based on what I know about their financial circumstances, they just made XYZ move. In Charlie Munger's case, bought a ton of Alibaba. What does that tell me about the world? How does that update my evaluation of the probabilities that something will be true or false? So I had to get to the realization that I am never going to know everything firsthand. I have to make those inferences. I have to study people like Charlie Munger, but also study people like Carl Icahn. And then when I see them make a move, try and understand why. Most of the time I won't, but every now and then it will update my probabilities in such a way that I have an insight which will enable me to do something. So back to Charlie Munger. So that's some information on Costco. Charlie Munger also had an investment in a company called POSCO, and it was a kind of like the rationale was not dissimilar to Costco, this kind of low-cost operator, as Nick Sleep would say, scale economies shared. It did not work out. And POSCO, which is the leading steel producer in Korea, is an interesting business, but it has not delivered the kinds of shareholder returns that those of us who went into it were expecting. So now we go to Alibaba. And I think that the company, as best I can understand, has reached a degree of centrality in the Chinese economy and in the global economy that as China grows, in spite of everything, all the other noise that is going on, it is extremely likely to be lifted. And in spite of not having Jack Ma at the helm anymore. And it seems to me that that's the kind of analysis that Charlie Munger has done. So it's in this unusual place of being part of the retail infrastructure of China and of the world, while at the same time having some really, really good economics going on around it. So,
yes, you have heard from the man himself. So this Q&A session with Guy Spier was posted back in March of 2022. So time to go all in into Alibaba. Oh wait, I'm already all in. With that, I'll see you in... So I'm just joking, by the way. Please don't just blindly listen to some random guy on the internet. So the only thing you should listen to is to smash that freaking like button. So in case you're not aware, from now until the end of October 2022, Moomoo is currently running a Cash Plus event where you can get $2 worth of cashback daily for the next 30 days. So as long as new users who subscribe to this Cash Plus account of $100 and above and ensure that you hold the position of $100 within the next 30 days, you can get $2 cash coupon every single day. That's a total of $60 by the way, and that's a 60% return on investment. Where would you find something like this? I also understand that many of you investors out there are always in search for the best investment platform. So Moomoo is exactly the app that tries to serve that purpose. Moomoo allows you to buy and sell securities outside regular trading hours, both in the pre and also post market. On top of that, they provide you with a series of advanced orders mechanism like stop order, trailing stop, and trailing stop limit, to name a few. So this would allow you to set specific strategies beforehand and you will not need to worry over it, especially for all you Singapore viewers, where the US market essentially opens up in the wee hours. So for new users, you can get welcome rewards worth up to 190 Singapore dollars with your first deposit of minimally 2,700. So I'll leave the link in the description box down below. And for all my US and Australian viewers out there, don't worry, I got you covered as well. Moomoo is also running aggressive rewards campaigns, giving out free stocks or even cash rewards. Everything will be in the description below. Thank you Moomoo for sponsoring this video. So for those of you who don't know yet, Guy Spier is the fund manager of the Aquamarine Fund with around $315 million in assets. And he basically had a lunch with Warren Buffett back in 2008. So he's also probably better known, at least in the YouTube space, for buying into Alibaba as well and being a Charlie Munger disciple. So if you were to just hop onto DataRoamer and search Aquamarine Capital, they currently have 3.17% allocated to Alibaba and also around 1.75% allocated to Daily Journal, which by extension has exposure to Alibaba as well. So as you can tell from the short extract that I showed in the first part of the video, Guy has been a rather big fan of essentially cloning investment ideas from all the different great investment messiahs. And he essentially walked you through his thought process of cloning and quote-unquote imitating Charlie Munger. So I do have my own reservations with regards to cloning, but as an effective capital allocator, I'm sure Guy has much more tricks up his sleeves, and cloning is just one of them. So I think, as a veteran capital allocator himself, I'm actually quite curious if there could be potential subsequent trigger points that will push him to maybe buy more Alibaba shares, or what would be his deal breaker for him to exit out of this position. So maybe when more of you guys decide to subscribe to this channel, I might be able to slide into his DMs and get him onto the channel itself. For now, it's all wishful thinking. Anyway, Guy went on to make a fairly interesting point.
I happen to be aware that some people were selling Alibaba and buying other companies, and Charlie Munger was encouraging them and agreeing with them that that was a smart move. And then I discovered 3 or 4 months ago, whenever it was, that he's been buying Alibaba while he's been encouraging other people to buy something else, which was really, really interesting to me. So the other sort of like blockbuster company in China, Tencent, going back to my earlier point about kind of analyzing stakeholders and doing real sustainability analysis, I have a huge problem with gaming companies because I think that many of those games are rotting the minds of our young people. It's interesting to me that the Chinese Communist Party decided to ban children from playing more than 1 hour a week. And so for me, gaming companies may be the new tobacco. And I think that that's part of the reason why he was not interested in Tencent. Last piece of the analysis, I happen to know, and this is a kind of inference, you know, he's got a huge investment with Li Lu. Li Lu has got extraordinarily good understanding of China. Li Lu is this Chinese and very, very genius investor who was at the Tiananmen Square demonstrations. He was one of the protesters. For a certain period of time, he was a persona non grata in China. And so that leads me to believe that Charlie Munger has a deep understanding of the place of Alibaba, not just in Chinese business, but the way the Communist Party sees Alibaba.
So essentially, the main protagonist in his story was Monish Pabrai. And I've covered Monish's opinion on Alibaba just a few videos back, so you can watch it afterwards. So Monish himself has converted his Alibaba exposure to Tencent, and Guy has laid out his own personal perspective about Tencent. So truth be told, I don't really see Tencent as a gaming company. It just happens that Tencent is the largest gaming company in the world. Whether is it by accident or whether it was carefully manufactured by the management team. But that's another topic. So you should also know that I'm also a Tencent shareholder, albeit a much smaller exposure in comparison to Alibaba. But I'm essentially buying the whole social media network that underpins the business and not so much purely the gaming portfolio. That's just my quick thesis. Now, back to Munger himself. So I'm actually quite interested to know what do you guys think about the short story Guy shared, where Munger himself was essentially giving his stamp of approval to Monish on his sale of Alibaba, while he himself retains his exposure under the DJCO portfolio. So I think it's also an open secret by now that Munger managed the risk associated to Alibaba via position sizing. And his intention of doubling down back in Q4 of 2021 was basically just trying to bring his cost price lower. And he essentially sold the initial shares, probably for tax loss harvesting purposes. So Guy has also shared his perspective on managing risk with this Chinese-related investment.
I also bought some Alibaba. What I did was I sized the position right for, I sized it well below what would have been right for me. I think often the answer when you're investing in public markets is position sizing. You're very lucky you can go, and especially if you run a small fund, in many of the businesses that are out there, you can go as large or as small as you like.
So I've been reflecting a lot about this topic on position sizing, and I might do a video on it soon. So with that, I'll see you in the next video, but more importantly, I will see you on the moon. Goodbye!